All right, let's jump into things. Time for a bit of the weekend wrap, weekend review. Um, so where we are, it's 120, 122 to be precise, on 17th of May. So just ticking over into the second half of the month and coming into almost the end of kind of almost the end of the first half, and I suppose we've still got next month as well, but certainly in the tail end, and it seems to be sort of flying by, and it's been hectic, yeah, but everybody knows this. So let's get into it. Quick little look at news that just sort of came out overnight. Sort of basically the only sort of bits of data in that was sort of note was obviously this US data coming in 12 o'clock. The consumer sentiment, as you can see, revised up previously, which is obviously, somewhat of a positive. And then expectation was that it was going to actually, what was it revised up from? From 50, expect to come in at 53, came in 50.8. So obviously under expectations there. But I think maybe the revision up as well, possibly sort of factored into things a little bit. I think probably more of the mover because I'll get onto DXY in a second, but because the market bought the US dollar off this, and the inflation expectation 7.3%. It was previously sort of revised down from 6.7, but obviously this thing sort of creeping up a little bit. Is sort of more in the camp of, well, if the expectations are that um, inflation may sort of peak or sort of rear its head a little bit, that the Fed will be forced to sort of hold the rates longer. So they're not going to be sort of, I've covered this every day, but they're not going to be hiking rates. That's fine. So the real decision is between, cutting and holding, and when is the cut going to come? And, people are sort of saying that it's cuts possibly coming next month. But I think the general consensus with the market is that that's been pushed back. And that's sort of giving, a little bit of life to USL. Like it's still sort of obviously got a lot to overcome, and it's holding in there. So it's had some big breakouts this week, unable to really sort of double sort of consolidate that sort of breakout, but I'll show that in a second because it makes more sense with the chart. But we are sort of seeing, oh, sorry, one sec, I'm back in there. Yeah, so we are sort of seeing it's almost sort of similar with what's happening with the US dollar and well DXY in this sort of case, but in that you know the rates in question as to whether they're sort of going to be cut or held kind of thing, and US dollars almost in the same sort of inverse thing as to whether it's going to hold or break out. So obviously break down, break out, whatever. But it's a very sort of tough read at the moment. But that's why we have the chart so we can hopefully sort of make some sort of use of it all. So look, I'll start off with DXY just so while we're sort of on the topic of it all. And we have been obviously sort of grinding and grinding our way back up. So where were we? This is where we ended the week, sort of with this little breakout, which 104 is the level that I've been sort of touting since, back down over here. It's a very important level for me that I've been watching and sort of saying, okay, look, if we get above that 104, 100.4, which is just across here, that's where we're going to see some action. And as you can see, came up right up here, rejected down, and when it finally went through, breakout, back test, higher high. This is what you want to see. This little setup here is showing us sort of like, okay, you know what, maybe we're done and we've got a temporary sort of bottom in down here. We can see, despite these sort of smaller little internal structures, which, I've covered this a couple of times of that, but you can see buys moving up and we failed and we failed. But the larger steps are in this progressing factor. And you've got to unpack these sort of things as to what does that mean? It's sort of like, because there's so many people going, oh, US dollar, it's dead, and it's all this sort of stuff, and bear flags and all this kind of stuff. And that's fine. And yes, and that definitely, look, you look at where it's come from last couple of weeks, or last month, or a couple of months or so. We are still, obviously, if you were to sort of say what direction we're going, well, we're going this way, left to right, top to bottom. But at the same time, what we're seeing in a more so that would be your long-term view. These little ones here, your short-term view. Well, this would be your medium-term view, and that's fine because you don't have to sort of you know sort of treat this thing like you're investing and you're going to buy a US dollar to get out in 6 months. Maybe some people do. Maybe that's what it is, but that's not what I do here. What I do here is trading, and short time frame stuff. Medium term is a great way that you can sort of get an idea about sort of what direction the market's taking it. You know where you kind of got to be put the warning lights on and sort of say, hey, look, you know what? Maybe I've got, well, no, not that I've got it wrong, but maybe it's the market's shifted. Because that's the thing, you're not moving the market. You're just interpreting what they're doing. So there's no wrong. Well, I guess there is a wrong, but you know what I mean. If the market starts to break some of these key levels and starts coming back down here, well, it's like at the moment it's moving up. You can see buyers are progressing up. If we see a lack of buyers at this level, well, then it's moving down. We change our outlook, we change our approach, that kind of stuff. So anyway, enough of that. The main thing that we're sort of looking at the moment is that look, we got this breakout. There's the double break. Boom. It's still coming back and retesting. So it's found itself a little high and a low that we can work along. And really, I think these are going to be the crucial levels for the market to stay above, because as you can see, this is where the buyers were. They've moved up from this little bit here. You've got internal structures that are, coming and going, but as you can see, buyers are moving up, buyers are moving up. And this is what I was saying, you got kind of get a little bit ahead of myself. You got to unpack what does it mean? And it means that sort of like, despite everything that, markets in this sort of more bearish sort of mode, people are willing to pay more for the US dollar each time. You know what I mean? Like this, given all the facts and all the data and everything that's out there, they're saying, hey, look, you know what? End of April, this is how much I would have paid for it. I'm not going to wait for it to come back down here again. I'm going to buy it here. Pushes up. You know what? That was a good price, but I'm going to buy it here. And you got to say, why is it doing this? Like, why would you be moving up your bid, moving up your bid, moving up your bid? Well, you're moving up your bid because you think that it's going to end up over here at 103, 104, who knows? Like, it's not the point of where it would end up. But the fact is, you're paying more for it because you don't think you're going to get an option to buy it here. And that's the thing. Like, if you sort of thought, look, this is a great level to buy it at, you could be waiting down here with your buy orders. Well, you're not getting filled. You know what I mean? You may have moved up here and you can, I'll wait for it to come back here. You're not getting filled because the buyers are paying a little bit more each time. And of course, there's two sides to this market. There's the sellers as well. You know what I mean? They can't sell it down forever. Well, maybe they can actually. Maybe it will go down to sort of 80 or something. But at this point in time, people are sort of selling it down. Well, you know what? I'll sell it for this. You know what? I just don't have enough liquidity, or you know what? I don't want to sort of sell for that. So this is where they'll accept. So anyway, the point is that the buyers are pushing up through here. We had a strong level of sellers here, which is what our resistance was. They got taken out. I covered this as it was happening. I was saying, look, this is where your stops will be. They got stopped out. Boom, come back down here. And then what did the market do? Bang, they bought it straight up, or they closed their shorts, because people have been sort of tracking this thing all the way down here. As long as it stays under this level here, they're making money. Came up here, sold it down more. Anywhere through here, came up here, sold it down more. They're making money, making money. This time they got it wrong. That's fine. It's not that they got it wrong. It's just that the market's shifting and turning. So now you close out your positions. Made money, made money, made money. And then this time you didn't. Fine. Get me out for zero. Bang. And what happens? It explodes back up here. Comes down here and tests it again. Wow, well, I didn't get out last time. Now I can get out now. Bang, moves through here. So this is what will make this a very important sort of level. Because if we see the market come back down to this level and then sort of push through it, you've got two things happening. You've got one, that the buyers aren't here, and the buyers are going, look, I was happy to buy it all the way up over here. Now I'm not so sure. Let's see what happens. It happens down over here. Whatever. It doesn't, whether that level's there or there kind of thing. It's not the point. The fact is that this is a strong support area. It's been tested a couple of times. We know that it was a strong level to get through. It's proving to be a strong level to break back underneath. So as long as the market's up above sort of 102, 102, call it 100 just because it's a round number. We came to sort of test it here with the back test. As long as it's above 100, we're very much in this progression, getting ready to potentially have a bit of a breakout. And what I mean, it's came back into this very strong, like it was this horizontal, very close, didn't quite sort of come in contact with this sort of falling resistance from the highs up here. Oops, not that one. Make it to the cent. Or maybe it did actually. This is the importance of getting these things very crucial on, because you can see, sellers are here, went off on a little bit of a tangent coming down here where the sellers were pushing. They weren't waiting to get up here. They pushed down their sort of sell orders quicker. Now we came back up here. This came very much in line with this. And this is what I was calling for the confluence. Obviously, I had that out over here. But the point is, it's a price level. It's not a time level. We got a confluence here. Market's got anybody that was trying to sort of trade off these horizontals, bang, they took their profit. Anyone trading off these diagonals, bang, they took their profit. This time, the big thing with these things is you look at the reaction. How big's the reaction been these other times it's come into contact? We've only got, the initial start point where it got sold down hard and the second contact. So you want generally at least sort of 3 to sort of really confirm that. And this is kind of the third one that we've had just here. So it really is sort of shoring up this falling resistance. And again, sort of maybe I've had too many coffees this morning. I'm saying too many things at once. But if you look at this little line that it came off on, this one you can see how big these sell downs were. You can tell the kind of reaction and the size that you've seen when it's come into contact with this line. The fact that this one so far has only just come back down here and is already coming back up into another test of it means that there's a high likelihood of it sort of going through. It's like if you sort of, it doesn't matter whether it's a horizontal or an angled trade, but if you're coming down to something and here's your support, comes all the way back up here, and then comes all the way back down here, there's a lot less likelihood that this second time will go through. You need to get a smaller bounce and then potentially go through. It's kind of thing like that's how cup and handle kind of works. Obviously this one's inverse, but the theory is still the same. So opposed to if yours just coming down into a zone like this, your bounce is only to here, and then that'll push through. So you really need that smaller test. If the test has not come for, has been a super strong reaction, takes a long time to get back up there, there's less likelihood it's going to go through in that time. You want it to be quick, like as in, you're tapping on a wall. So if you sort of hit on a wall and then stop and stop and stop and stop and then hit on a wall and stop and stop and stop, it's going to take a long time to break through. But if you're sort of there and you're pound, 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 quick hits in succession, there's a higher likelihood that that's going to break. And the same sort of thing goes with these sort of patterns here. So the fact that it's sort of like the reaction isn't as strong as we've seen previously off some of these lines, and it's coming back into it, means that it's very much in a mode where it's getting ready to break. We've seen the confluence of this horizontal, and obviously now there's falling resistance. We're back below this other horizontal, which is this other low over here. I think this is going to be an early warning sign here. But the two levels that I'm looking for are still the same as these in terms of price. But I think this horizontal here, at sort of 100.3, 100.4, I think this is going to be your early warning sign that we're getting a bigger breakout. I think if you go above 102, that's going to be a big breakout. This is going to be this kind of move. And as I've said a couple of times with this, you don't want to necessarily want, because it takes so long to turn this market around, you don't want to get in front of it. It doesn't necessarily break out for 50 or 20 points and then sort of just roll over. It can. I mean, I look at these sellbacks here, but it's done so much work and so many little failed breakouts to get this big breakout. I think we're going to see something that at least sort of comes up 104 or so, a big horizontal through that zone here. Like, I mean, this is a 50% retracement. That's kind of really where I'm targeting. You've got other levels. It's not going to go straight there in one candle, but I'm sort of prepared to sort of trade this thing for a period if we do get this breakout above 102. That's a big, I put an alert there. I'm going to call that a major breakout. I don't like this new message setup. They've put the settings and the message on separate pages for trading view. Okay, major breakout. Excuse me. So again, look, that's a bigger overview of it all. And you can see buying pressure is moving up here. RSI is happy to sort of support it a little bit. This is on the 4 hour. We came up and, got that breakout of the pullback here. I mean, if you look at this, let's get this out of the way. If you look at this as a sort of pullback, well, same sort of thing. Well, not remember, it was 2 minutes ago, but the internal structures and then the bigger structure. So if we take one of these ones, call this guy over here, you say the buyers were here, buyers are here. So this is just the internal structure of this larger kind of move. So to me, I think this is very much getting in the position where we could see a breakout coming possibly even this week. Get through to the news. Actually, that's one thing we skipped. I didn't even look at the news coming up for the week. Look, I'll finish TXY. So to me, sort of, this sell down, I always say I don't really pay too much attention to the last hour or so in the week. I think that's kind of profit taking. Nobody with serious note is sort of at their desk. So I disregard the fact that it kind of sort of, I don't call this like, oh, I was trying to break up and then it sort of failed. I mean, it did come right into this little zone and sell straight back down. But I think this is very much, as you can see, the internal structure is pushing up through this level here. I think there's a good chance we get the breakout above these levels, so to come this week. For the downside, as I said, if it gets back below 100 through this zone over here, to me, that's kind of warning signs that maybe this is a failed breakout. But I'm more in the camp of getting an actual US dollar buying breakout to the top side. All right, so let's go back and have a look what news we got coming for the week, because maybe this will give us an idea about what we could expect. Yeah, so 17. Yep, moving forward here. All right, so Monday looks pretty quiet. We've got bank holiday in Canada. We've got a little bit of sort of China data coming out. I don't think that's really going to affect US dollar. Great sort of deal with it all. Obviously, sort of more the yuan, which then in turn can sort of affect the Aussie. So that could be a little bit of a mover, but it's not something that I think is going to really blow things apart, unless you see a little bit of a shock in the numbers. But retail sales were actually quite strong, 6%. Yeah, very strong there, and industrial production not too bad either. So let's just have a quick look here. Slowing down a little bit from it all, but as you can see, last month was a little bit of a spike up with it all. I actually saw something about shipping containers going from China to America, just pushed up about 250% week on week as well. So it really sort of goes to show that this whole sort of tariff thing may eventually sort of turn out to be a bit of a blip. A big blip, of course, but if should they sort of continue to sort of work these things out, it may become stale news, and the market will move on to some other sort of catalysts pretty soon. Okay, so apart from that, we've got China, we've got CPI over in Europe for that, 2.7, 2.4, so looking pretty flat, nothing really sort of shocker there, a couple of Fed speakers. Big one for the Aussie this week is, pretty much expected 25 base point cut. So if the market's pricing 25 base point cut already, and, Aussie's one incredibly frustrating, ugly chart, it's been trading. It's hard because it's in two boats. It's up the top of its bounce and it's consolidating around the high. But anytime it tries to progress and move forward, it gets smacked on the nose. A big theme that it seems to have been with the cash rates and interest rate decisions recently with a lot of these currencies is that it's heavily telegraphed. They actually come in as expected. I don't think I've seen any shocks for a while, like as in, we expect 25 base point and then they cut by 50 base point. So I don't think I've seen any shocks, but generally because it's so priced in, you almost sort of see inverses to what you would textbook kind of expect. So, a cut will typically make a currency go down and weaken. Obviously because, lower interest rates, people more borrowing, more money in the system. But because it's sort of kind of so heavily telegraphed, people have already taken that into account, which is what pricing it in is, that sort of then you sort of get this bit of a relief and you actually see things progress and push up a little bit directly after the rate decision. So this is pretty much as expected. I've heard some sort of calls. I think NAB was saying 50 base point is what they're expecting. But I think this will be a sort of a test the waters, see how she goes kind of thing. I don't think they're going to be holding. We had very strong sort of job numbers the other day. So, you know what I mean? That kind of takes away the 50 base point kind of thing because obviously, you know, if the economy's struggling more, then they need to give it more of a helping hand. By more of a helping hand, that's a 50 basis point cut. They don't really need that. And I think sort of 25 basis point is pretty much as expected. So be watching for the sort of press conference afterwards to sort of see, you know, what kind of sort of language, you know, Bullock tends to sort of come out with, to sort of see if that's going to have the bigger effect on the Aussie. But as I've said a couple of times, like we can have all the kind of data that we want. It doesn't really matter in the bigger scheme of things. You know, it's what's the market going to do with the US dollar, and we're at the tail end of that. So equity market's been running hot. Aussie has not been able to break out off that. Copper was doing well, didn't break out on that. Like, you know, if we see US dollar sort of run and equity markets come off, I think we're going to get the breakdown on Aussie. And obviously, this sort of potential sort of cut is going to be sort of adding to that downward pressure. So again, look, I've been sort of trying to sell in, well, I have been selling into this Aussie move up the top over here, but it's been very, very frustrating. It's been okay, good returns, but you know, you'd like to lock some things down sometimes, you know. Anyway, moving on through the rest of this, we've got CPI over in Canada. So 2.9, so slight tick up there with the theme. Yep, so it's all looking a little bit up that. I don't trade CAD obviously, but it's just interesting to sort of see how the rest of the economies are doing with some of their figures, and yeah, looking to sort of creep up there a little bit. Move along, consumer confidence over in Euro, black. Couple of speakers, CPI in UK. Wow, that's looking like a decent push up. Yeah, it'll be interesting to see how this one goes. But 2.6 up to 3.3, that's a big jump. Yeah, it must be something causing that because that's a big jump in expectations there. Core, not too much, but you know certainly the headline number. So it looks like it's really moving up. Moving on, so not a great deal is going to affect. We've got PMIs coming out. So PMI day on Thursday. Um, these are the ones with the 50 as their baseline and sort of see what they're expecting. So 51.7, so maybe too early. Don't have any sort of expectations with this kind of stuff here. Obviously, stronger numbers better for Aussie. Weaker numbers will be a little bit weighing on Aussie. Maybe through the rest of the stuff over here. Not a great deal. No massive bits of US data. So US, this will be the one that kind of moves things a little bit more, but not till Thursday night. And that's coming out, yeah, pretty flat. Maybe a little bit of a slowdown, tick of a slowdown here. So these are the things that are really paying attention to at the moment because, you know, the US dollar, if they can get a little bit of positive data back to back to back, then it might actually give it some legs. But you know, it sets up, and then the data disappoints. And this is why you've been seeing on the charts, it's moves up, and bang down, moves up, bang down. So yeah, that's definitely one to be watching. I'll be sort of paying attention to the US PMI, certainly more than sort of any of these other guys like Euros and all that kind of stuff. And then to finish the week off, not a great deal. So relatively light. There's a couple like, you know, the standard sort of bits of data and that coming out, but really just the rate decision on Tuesday for Aussie is really the one that I'll be paying attention to. So if we move along here, we just have a look at Aussie. And this is what I'm talking about. Apart from the fact that you can see this is pretty much going for the award of the most frustrating, annoying chart there is. But you know, you can see that every time it's trying to move up, it gets smacked down. Tries to move up, gets smacked down. It tried to have a little bit of a flare up through the session on Friday, Asia. But as you can see, there wasn't any real catalyst for this, and that's why I was watching it at the time. And I saw this sort of break through here, so I was like, look, we're in a consolidation. If we get up here, back test here, and move up there, that might be what you're looking for if you're looking for longs. I didn't even expect it to get up to over here, but I couldn't see any direct sort of catalyst for it to get up over here. And obviously, without a catalyst and some actual legitimate kind of reason for it to sort of buy up, it just got smacked into and bang, pretty much ended the day where it started. So again, pretty flat with it all. So if you have a look on the daily, um, you can sort of see that, you know, obviously that's 3 days of selling into. It's a bit of a sort of this off for 1 second. You can see it's a bit of a sort of doji sort of gravestone, I think they call it, basically hanging man upside down. So, I mean, look, more or less it's a doji. It pretty much ended where it started, so it's just showing indecision with the market. We've had some big solid moves that have come up like this, and then, of course, just as quickly, they're undone there as well. So if you look at this as a bit of a sort of like thing, one thing I've noticed a lot with Aussie recently is these three drives. And sometimes clearing these charts will give you a different sort of perspective on things. But if we put the drawings back on, we can see we had the little, let's go in the lower time frames. We had the big sort of three drive, 1, 2, 3 over here. And then this back test came right up into that zone. So if you call, that's the whole zone with the three drive. 1 drive, 2 drive, 3 drive, break down, back up into the middle of that zone, and then it sold down. We saw a similar thing over here, smaller, like because that was quite a large setup of it all. But this is another one that we had, and this I actually sent this to a mate at the time. It was a great trade that I had throughout this week. This is your zone here. This is your 1, 2, 3 drive, wherever the little line's gone. There's a little drawing thing. This one here. 1 drive, 2 drive, 3 drive. Broke down. It's a bit harder to see on this one here. Broke down, came back up into the zone, and then bang, sold down over here. If you look at this on a daily here, not as clean, because this area probably would have been liked it to be a little bit higher, but if we clear this for 1 second, and try to sort of match this up through here, this is almost looking like a 1 drive, 2 drives, 3 drives, back up into the zone, bang. Maybe it's stretching this a little bit, I don't know, but it is very much what we've been seeing recently, whereas we've got a very strong horizontal, we've got increasingly higher highs, and then we see how these things are played out. So if we go get rid of this and go back to what we were actually looking at, these little 1 drive, 2 drive, 3 drive, bang, smaller time frame here, 1 drive, 2 drive, 3 drive. So it's not beyond expectation that we may actually be seeing something similar on a lot higher time frame. And this is what it's all about with this kind of thing. It's pattern recognition. And look, this thing could just end up over here. Look, I mean, anything's possible. So you can't say that it's definitely doing that. But this is how you can potentially make some money by being able to sort of pick out these things and enact and trade on them. To me, I'm looking for a downside. I think there's a lot of stops and everything sort of that will be built up around the 63 zone. I think once you get hammered here, I think it's going to come down here. I think US dollar is going to run. That's my take on things. That's how I'm trading it. I do like the the fact that this is getting sold into obviously each time, but you got to be, considering both sides of it all. These are the levels that we picked out last week, and this thing flew off this level, came down here, tested, bang, flew off here, came down. Most likely we're going to see a pretty strong line of defense to try and sort of hold this thing should it come down to it. We've come into the 90s a few times towards the end of the week here. If you look at this on a weekly, jumping all over the time frames at the moment. Let's maybe put on the other one. Maybe do so much on the weekly here, but like you can see, it came down into the 90s a couple of times, but the market's been trying to hold it. This is not. Oh, this is that 3 drive that I was talking about. Yeah. Yeah, so into these 90s here. So you can see there's a smaller little zone that the buyers are defending just here. So the thing is, you want to get underneath, you want to get a close down under here, under this 90s, because, here's 1 test, 2 tests, 3 tests into this 90 zone. A break under here will get you down to testing your major breakdowns, which will be 60s, and then you're going down to kind of made shambles of these charts going back and forth. Anyway, 90s is where you want to sort of see a break underneath. Then you're going to be testing these previous lows down here in the 60s, and the major test is going to come at 63.20. So that's kind of what I'm looking for this week. This falling resistance, I wasn't a big fan of it because obviously it's only got the two touches here and then broke through, but they do seem to be dancing around it on the other side. So not a big fan of it, but look, I'll keep it there just for the time being to sort of see if we see much of a reaction. I think these levels are a little bit better as you can see them are obviously sort of stepping down. Um, Quick little take of all this stuff is pretty much unchanged from this. We've got US dollar potentially looking for a massive breakout. And this is the bigger arrow because it's the more impactful thing. Medium of this is the yuan, so China. It's not really doing anything. It's just sideways. It's it's doing what it does. It grinds along. It's underneath its major supports, but it is looking like it wants to push back up into the range. So I would say there's probably almost a little bit more to this direction as well. Not fully sort of sending it down, but it's threatening for sure. And then you got RBA, which are looking to cut this week. To me, that doesn't give you, or doesn't give me anyway, a lot of confidence to, hey, let's go buy Aussie. To me, this sort of is almost one step away from doing completely down, which we may see. If we see the yuan weaken, US dollar get its breakout, and RBA cuts, that's the secret sauce to get it down underneath 63, in my opinion. And then we look sub 62 at least. Yeah, so that's pretty much what we're looking at for Aussie. All right, flip along. We got gold. Gold was a great trade this week, actually. So a couple of little things that we had this sort of obviously after that gap down, we had this big sort of bear flag thing that played out right down to the dollar, pretty much. I had 31.60 as my level, as I've been sort of saying for weeks. Um, it broke through here and then just absolutely sort of melted down a little bit down here. But the reaction on this was crazy. This was like a big sort of pushback up over here. I think it was like 130 bucks or so. But this is the plan of attack that I had. That it was a come down into the zone. This is a big area. This is 38% retracement of April's move. Oh, sorry, no, 38% retracement of 2025's move. It was the 61% retracement of April's move. Plus, it was the previous all-time highs before we had the sell down before the explosion. So with that, you had a big sort of confluence, and I expected to get a reaction over here, and that's why I exited out of my positions. I didn't get down to 31.20 or whatever the hell it got down to there, but I took a good chunk on the move all the way sort of down here, protected myself a little bit. I probably got back in a little bit early with a couple of these moves up over here, but as I said on all the videos all through the week, this is what I was kind of looking for. You see this sell down here, find the base, move back up, look for these areas here because this is the fib retracement as this move is played out right now. So a lot of people wait till the whole move's done and okay, now we're over here, now we're doing here, so let's put a fib on it now. No, you're looking at this particular move from the high to the low, and this is how strong the sellers are at this point in time. And as you can see, it rejected from the 38%. That's very much, okay, no, sellers are definitely applying pressure more and more and more. It did bounce up and hold a little bit into the end of the week. Like as I said, disregard the last candle, it still found some support a little bit, sort of bounce off the lows there. And as you can see, this RSI is quite high on this thing here as well. So I don't think this is necessarily going to break, Monday, Tuesday, this kind of thing. I do think we will come down here, but I'm open to the idea that we could potentially see something to this sort of effect over the next week or so. And maybe we drift back up to sort of mid 32s, and then maybe we come back down here and we sort of wait to sort of see, is there going to be any sort of bit of news that we've sort of seen, like sort of progression in talks or a stalling in talks. Stalling in talks, we go back up. I don't think the Russia-Ukraine thing is really that impactful. Putin didn't turn up to a meeting or something this week, and they still sold gold down. You know what I mean? And that's why I sort of pay attention to these things, albeit it's sort of like innocuous, sort of a bit of a headline. Look at how the market reacts from it. You know what I mean? Everyone touts like, hey, war and all this kind of stuff. And of course, yes, gold will move on those kind of things. But is it moving on that right now? That's what's important. And that's what we sort of trade off. Because if it's moving on it right now, and then you see this kind of stall and, these sort of aggressive kind of moves, well, sort of headlines, well, gold should be appreciating, and it didn't. It sold right down into it. Actually, sort of had a little bit of pop because it came off about here, where we had those headlines, and just goes like this, and they just sold into it for the rest of the day. So yeah, it was a good trade actually, as they're coming down here and catching the second move down to the bottom over here. So look, I'm sort of watching. I do, as I said, I do think we're going to get down here, but because this is such an incredible confluence of levels, it's going to be tough to get through. I am cautious of the fact for short positions at the moment that this is where our buyers were, not the buyer zone, the buyers, and that they have moved up over here. I don't think this is the same kind of thing that we're going to see to sort of say, hey, look at the bottom and we're coming back up to the top over here. Look, it could be, definitely. If you get above 32.65, well, then we can start to look up to mid 33s again, you know. But I think sort of you're going to need a catalyst to get it up there. And it didn't seem like there was a great deal of sort of data to sort of support any kind of move like that this week. So without that sort of driver and sort of, wow, what I call landscape changing bits of news or data, I don't see this necessarily getting a major break one way or the other. So I'm happy to trade the range a little bit through here. If we get back up around, excuse me, these mid 32s, I'm happy to try and sort of short this thing and sell it back down again and sort of look for this range to play around here. Should we get a close, as I said, above 32.70 on the top side, or even a close, as I said, I'm disregarding this a little bit here because I think this is more just hitting stops. 31.60 is still the line that I'm interested in. I think this is just suckering people in and taking out the stops because a lot of people would look at this line as well. So hey, let's put our stops underneath it. Well, bang, good on you. You just got whacked out. Or maybe, hey, look, it's broken underneath it. Well, let's go heavy short, and so it's important to sort of understand these things. If you look at this, an interesting sort of thing though, if you look at this bottom here, this is the argument for this potentially to move back up higher. So you got your big solid move down, and this is what I talk about structure constantly. You got your move down, you found support, you move up, you find resistance. This is the important leg because this is the leg that's going to tell you double bottom, look for a range, lower low, well, continuation and bang, we're moving down, or higher low, which is what we got. That's your warning sign that then if the emphasis is now put on this level over here, that high, the bounce high, and you break through that, that's your warning sign, that's your trigger. Okay, we're moving back up the other way. And it doesn't matter what time frame this is on. This is price structure, this is flow, and it can be applied to basically anything. It's irrelevant of what market necessarily. Like some markets have definitely got different nuances, but that's just basic sort of structure with it all. And so if we look at this on a sort of larger move, higher time frame, I'll play it out three ways through actually. Look, 4 times actually. So support, found resistance, attack that low. What did it do? It broke through, so bang, cycle starts again. This becomes leg 1. Support, resistance, comes back down, tackles this low, breaks through, cycle starts again, goes all the way down. Smaller one here, now it's up here, tackles the lows, breaks through. I just covered how that one turned around, but now you got to look at this. This has moved up. It's found resistance. This has now sort of created a higher low. So whereas all these other ones, it tackled the low and went through, this one didn't give us a double bottom, didn't go for a lower low, went for a higher low. So that's why it's putting it on warning. This is for the argument that potentially you could see this thing shift and turn around and come up the top over here. This is why this sort of 32.60, 32.70 level is important. Because if you get a move, now the emphasis is on this high here. If you get a move up here, if you get a move back up here, we're going to be tackling this one now, and it breaks through. Now the emphasis is, you can see that the market's now shift, it comes back, and now we're looking to see if we're getting continuations in the other direction. So you can see the structure change direction and move up here, but the big sort of the early warning sign is this. Because the buyers, each time they've been here, they were here, they moved down, they moved down. You know, in theory, you should be waiting down here. This is where they bought it. This is where the buyers stepped in. Whether it's short covering or buys, doesn't matter. But they didn't wait for it to come back down here. They said, oh, that's great, cool, I'll buy it here. So now you've got to be careful that this doesn't just go bang and then come back up to the stop side over here. So that's, again, look, bigger picture kind of stuff with it all, but that's what I like to do with these weekend reviews. It's sort of like, you know, cover the whole idea of structurally what's happening. What is there some news? Is there some data that could potentially be coming out that's going to drive this thing to give it? Because you've got to have a little bit of a mix of the fundamentals with the technicals. The technicals are basically an interpretation of what they're doing, but there's some sort of fundamental base. There needs to be a fundamental basis for why these things are moving. And you know, whether that's a headline that's made up or it's a headline that's real, you know, that's for you as a trader to be able to sort of determine, you know, is this credible? Is this going to last? Is it overblown? Has it not been reacted to enough? And that's why I sort of say these sort of bits with like sort of like the wars and all this kind of stuff. The market kind of disregarded it for a little bit. You could say it's partly factored into the prices and the reason that we were going up, but pretty much the uncertainty and lack of trust in the US dollar and equity markets, that's the real fundamental reason that gold went up. It's not because Ukraine and Russia didn't come to some peace agreement. I mean, they've been having 4 years of that war, and the gold's never run like we've seen recently. So that's not the factor. It could be part of it, 100%, but it's not the driving factor. And that's why trade talks, you know, as I said, if they break down, you're going to see probably a move up. If they sort of continue to sort of work things out, you're going to see it move down over here. And then we apply the technicals to that sort of fundamental understanding of how the market is moving at the time. But all good. That's the, as I said, the broader sort of thing. So what we're kind of looking for here is, you know, again, drifting up into the end of the week. It doesn't really mean much. But on the 4 hour, it did find a little support at this 3160 where we kind of think it is. This could be basically, as I said, a just a little sort of bear trap kind of thing. So I wouldn't expect it to, on downsides to come back to this 3130 till it's actually ready to move all the way down over here. So that's why I've dragged this box a little bit higher, and I'm more interested in where the buyers have come back in at this big confluence level, 3160, because that's pretty much exactly where they came in normal price structure. This is more fake out, sort of, you know, hit stops, drag in extra shorts, but in normal sort of price action, which is where it sort of bounced back up and then sort of re-leveled itself, 3160 was the level that they sort of said, yep, cool, let's buy and let's push back in. So what I'm looking for is possibly, look, just a range play through here. If we do happen to go above sort of 3270, then I'll sort of be looking back up around maybe this sort of 33, mid 33s, and possibly for a little bit of this to be a bit of a channel. And then you sort of look for longs between 32.70 to 33.30s, and then you look to short it. Well, I'll be looking to short it, I should say, should we get up over here. And then move that back down over there. So above 32.70, let's put an alert here. So breakout, I'm going to call it a major, kind of major breakout. Right, major breakout. No, let's call it a medium term because it's not a major. Major breakout would be going to all new highs and all that kind of stuff. So you got to have room for that. Medium term breakout, targeting say 33.70, but 33 mid 33s kind of thing, which is obviously about $100. So it's definitely a tradable zone through there. And a lot of people will short. Like I shorted the hell out of it coming down through here. Should you push back up here? Till we get actual sort of confirmation that this stuff is sort of gone away, there's still the likelihood and very plausible outcome that you see price structure take over, and that would mean a move back up to these levels over here. So it's just something to sort of keep in mind. But I think certainly if you get above about 32.70, I wouldn't necessarily want to be short in excuse me, short in the short term. But if we get back up to this sort of 32, 50, 60, and we start to reject back off from that, I'll be looking to play this range till we have a little bit more of a clarity and a reasoning and a close underneath 31.40 to sort of get that breakdown and then sort of go a bit lower. Look, this could also just go up here and then continue pushing down and dribbling back down out over here. So downside for me, 31.40 underneath there is my sort of ticket that I think that we're going to be going down to 3,000 and a confirmation definitely underneath that 31.20. All right, silver. I did take a position in silver on Friday, but in my typical trade fashion, jumped out. But I jumped out at like 95, so 90, yeah, around 95, so around here, which is not too bad. I mean, look, you got to trade with what you got, and sort of I got in. I can't remember. I think around 32.50s or something. So it wasn't too bad. You know, that's all you had as a move for the day, and I captured the bulk of that. This is also going in the running for most annoying chart. This Aussie and gold silver ratio are absolutely frustrating as hell at the moment. But look, for silver, I do think we are sort of seeing a slow death by 1,000 cuts, 1,000 sell downs. And that's what it is. It sells down, pushes back up, sells down, pushes back up. I covered this on Friday, and it's still the same thought. You are seeing this sort of sellers accepting a little bit less each time. We've got a nice little straight line that we can say, hey, look, this is the sort of confirmation line for the downside moves. I think we're going to get a fairly decent little sell-off here. The fact that this is consolidated for so long means that I think that we're really going to see something decent once this breaks. And I would have put it here. I did have sort of the levels down here a couple of times, but you can see how tricky they're being each time. And I think it's important to sort of take note of these kind of things as well, because this is where your support is, right? So this is where you're like saying, okay, look, buyers are here, whatever. This is an overshoot, and buyers are here. Whoop, just down under. So it's important to understand where those buyers were sitting when in relation to how the price actions move, because this is very tricky, and it goes to show that not all markets are the same. Some markets play different games to others. This is absolutely ripping everybody out. So, you get short here, here's a lower low, well, bang, hammer it back up. We take out the highs, I put my stop above the high, well, I'll go higher, bang, up here. It comes down here. Well, there we go, big sell down, moving down. Finally, this is the one. No, what do? We turn around, bang, shoot up over here. And I think this is really similar. We see gold does a lot of this kind of stuff, albeit a different structure, but it just is, in my opinion, wiping the book. Because you're dragging in shorts, you're stopping them out. You're dragging in shorts, you're stopping them out. Time and time again. People get sick of this. People get sort of like worn out. They either can't continue financially or they can't continue mentally because they're trading, they're getting hit, they're trading, they're getting stopped out, they're taking losses. They're just eventually people just go, screw this. You know what I mean? It's not moving anywhere. I'm just going to trade something different. And they move on, and then that's when you see the move play out. So look, I do think we're moving down. I mean, look, there's a clear-cut line if you want to go up above higher. I just don't see it happening at the moment, particularly with the US dollar potentially sort of breaking out. Copper, similar sort of thing. It's just a range inside a range, and it's just frustrating as all hell. So for me, I'm just putting this on the back burner till we sort of break this box, 4.8, 4.5. Then we start to see the move with it all. I'm leaning more to the downside with this kind of move here. And finally, with China, this is what I'm talking about. It is just frustrating and grinding. I mean, look, this is what China does. This is what the yuan does. It grinds and moves along like this. One thing to note, though, is obviously, yes, it's pushed down 1, 2, 3, kind of 4, 5, call 3, 4 times. It's tried to break down lower and get down under this level, unable to do so. It's found itself a little sort of falling resistance now. If this thing pops and breaks up here, this is where I'm targeting. I'm looking back up to here and for this range to continue. So this is US dollar buying. This is 1 week. This is Aussie. You'll probably sort of take a bit of a clipping on this as well. I don't see us necessarily moving all the way back up over here. I think sort of if you get back up to 728, you'll find sellers again. But I certainly, with this RSI stepping up so much here, as you can see, it's not negative divergence, but it really sort of tried to come back here, but this is not showing anything like it had
these previous levels. Look at how, look, oversold, oversold down into these areas. Down here, oversold. Came back here. Yeah, it didn't fully get down there, but it's nowhere near. It's sitting at sort of 54. And I think this is something that we're going to see sort of continue and push back up. And then we're going to see a push up into 724 there, which I think is going to impact Aussie negatively. I think Aussie's going to be hit a little bit with a weaker yuan because obviously they're so sort of touchy with the yuan. But as well, I think it's going to put pressure on gold. So, I think sort of like, if we see this breaking down this side over here, you might see gold be a choice for things in that. But I think sort of as this moves up, we're probably going to see a little bit more pressure on gold. Not to say that if this goes up here, gold's going to be breaking down, but I don't think, unless you're getting this continuing to break down, that you can see a breakout on gold. If you get down to, say, 7 over here, we could be seeing gold on major breakouts. Look, it probably doesn't need to get down here to 7. That's fine. But if we do see it moving towards this direction down over here, I think that'll be sort of when you see gold moving stronger. I think as this potentially is coming back up towards 728, these levels here, I think that's going to be a little bit of a handbrake on any sort of potential upside gold moves. As I said, you may get that little sort of breakout, maybe moves here and then it sells back down here, and that's when you get that little medium term breakout on gold. But we'll play that as we see it. But for now, I think this is probably going to push back up towards 725.3 and then 728 at the two levels that I'm looking at for the one. Make sure I've actually gone through everything this time. So copper, ticked over, one, silver, gold, bang. All right, that's it from me.